Hey, good morning everyone, and welcome to the PivotBoss pre-market video for Thursday, July 19th, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Real quickly, before we get into the chart, just take a look down here at the ADR indicator. This is where it quantifies the daily ranges or multiple day ranges for us. And you'll notice that most of the days here over the last week and a half have been below 65% of ADR. That's these fuchsia colored bars here. That tells you that prices price ranges are very narrow compared to what they had been. You can kind of see the increase of volatility during this period of time here, and then the significant decrease of volatility that we've seen since then. For example, the previous session had a range that was barely 50% of ADR, so an 11.75 point range. Remember, on a 10-day basis, we've been averaging at least 20.5 points, so this is rather narrow. So we're starting to see quiet summertime type of trading scenarios, but again, anything can happen after you see a multiple day sideways type of move. So this 1, 2, 3, 4, 5 days of quiet trading behavior could open up more volatility in the days ahead, but right now very quiet. So overall, I would be a little more cautious here as we are deep into summertime trading. Overall, the trend remains bullish here. We haven't even tested the 8-period average, which tends to be quite bullish. So if we were to pull back even into 27.91.75, that could provide a buying opportunity for a continuation higher. It's a failure to hold that level that would open up a move back toward 2700. We could continue to build out before something like that happens, similar to what we saw back here before we dropped. So we could continue to see some quiet type of behavior. So I would be cautious right now. There's nothing really to jump into at this moment. But failing to hold above the previous session's low, call it 28.05, could open up at least a short-term rotation toward 27.91. So we'll keep an eye on the ES. Nothing really standing out as a great swing trading opportunity at the moment, but we'll continue to let it develop. If we take a look at the NQ, very similar type of behavior. You can see the narrow price ranges that have played out, but overall, the NQ continues to be bullish. It has pushed to back toward all-time highs. You can see that every time price is pushed into the high intensity trigger zone, which is just below the 8-period and above the 21, it has led to a pop higher. So this market continues to remain bullish. We're at a point right now where we could see some quieter trading activity, but failure to hold 72.75 would open up a rotation to 69.65. So that's a very important key level. I would anticipate that bulls will try to continue to keep that area bid until failing to do so will open up the downside stops. Taking a look at crude oil. Now this one has been extremely weak, very weak. We've had two major meltdown days, failed new highs that have triggered those meltdown days, and here we've gotten all the way back to 66.29. That's a very important key level. I've marked a new key range that now takes us 63.41 up to 75.27, back to the midpoint of 69.34. That new key range right there gives us some very good boundaries to play off of. You can see that if we were to break to the upside, we would forecast major targets at 81.21 and 87.14 to the upside. On the downside, that would be 57.47 and 51.54. So we have some great targets to work off of on a longer term basis based off of this key range here. It's not the best key range, but at the same time it does give us some great boundaries to watch. So right now sitting on 66.29, that's important support. Failure to hold that level opens up a retest of 63.41. Above 68s opens up a pop higher back towards 70. So keep an eye on 68. Above that zone has stops that could open up at least a short-term bounce. But right now, very bearish for crude. A failed new high above 68 opens up another round of weakness back towards 63.41. All right, taking a look now at RTY. RTY has been extremely compressed in its range. If you look at a 5-day range average here, you'll notice that on a 5-day range average, we've been averaging 45 points of range, and right now the current range is 28 points, and you can see how compressed that range has been over the last several days. Look how narrow the price ranges have been here on the indicator. That tells us that we have some significant compression that could lead to major strength or weakness ahead, depending on which way we break out. The last time we had something this significant was perhaps back here, where the price range was very narrow right there, and then eventually we got a downside failed new low, and then that led to a big breakout to the upside. That could happen again here. You know, as soon as we get a breakout from this range, it could be rather significant, and if it's to the upside above 1700, we could start to run at least to new highs. Failure to hold 1675 would open up a retest back towards 1633. So right now, compressed price action, watching for signs of expansion out of this range, could be very significant. An upside break could start to take you up into 1750. So this is a really tightly compressed range. Continue to watch it because we could see some great expansion down the way. All right, lastly, taking a look at the YM. The YM has been pushing quietly higher here again. As long as price remains above 24,886, we could see a short-term continuation toward 25,327. We have a failed new high that's developing here today, an outside pattern. That right there suggests that we could be hunting a little bit lower, at least in the near-term time frame. But any pullback into this trigger zone may be defended by bulls for another rotation higher. So again, a little bit of a summertime trade type of feel right now, so continue to be patient with your opportunities until something really, really nice develops. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.